Hello traders and welcome to another video review. Today is Wednesday, October 18th, 2023. Let's find out what's going on the Forex calendar today. Most important data are right now on your screens, and it looks like China released the GDP overnight and industrial production data as well. The GDP beats the expectations of 4.4% with the actual reading of 4.9%, but it's still way lower than the last reading of 6.3%. That was for the period of the third quarter, so not that great data from China, despite the fact that they beat the expectations. Industrial production in China beats the expectations of 4.3%. And the actual reading is 4.5%, which is exactly in line with the previous reading, so not that great as well. CPI data from the UK beats the expectations of 6.6%, so the actual reading is 6.7%, which is in line with the previous reading. And we are still waiting for the CPI data from the Eurozone. The previous reading was 5.2%, the forecast is 4.3%, so it should drop dramatically here. We will find out in about 2 hours. During the New York session, we got data from the US, very important data of building permits and crude oil inventories. So we will definitely take a look at the crude oil market later. But first, let's take a look at the euro dollar and then see what we can do with the rest of the technical part of our meeting. Euro dollar 4-hour chart is showing us very nice bounce to the upside above the last resistance 1.0559. Now technical support tested already, and new local high was made at 1.0595. 1.0595 is the exact level of this previous local high, so we just need to wait about 2 hours for this candle to close, and then we will see what this candle is all about. For now, it looks like some sort of the pin bar candle. It might be doji, it might be shooting star, might be something else, so it's not that good for the bulls, of course. Nevertheless, as long as we trade above the intraday technical support 1.0559, the outlook remains bullish. We are trading above 50 and 100 periods moving average. We are trading above the short-term trend line support, and it looks actually quite good with this kind of a momentum. 56 points right now. It's not very strong, but it's positive, and it keeps moving up towards, of course, the level of the 70, which is the extremely overbought conditions level. We still have the chance to test the swing high from the October 12th, located at 1.0640. When this movement to the upside is done, we should reverse to the downside, because this is what it is in the background, downtrend. So the market would be much more likely to continue the downtrend, to continue the previous trend, which is down apparently. Only a sustained breakout above 1.0640 would change the temporary outlook to more bullish. So that's the euro dollar. Let's find out what's going on the crude oil. Let me just calibrate my my chart for the crude oil. 5-minute chart of the crude oil is showing some sort of the consolidation between 88.36 and the local high at 89.05, but we just had a slight breakout to the downside with the new low at 88.22, and now we are testing this intraday technical support. Let me just switch to 4-hour chart, and you can see it clearly right now that we might be moving higher soon, because it looks like this market is still making the corrective movement to the upside, right? Let's try to apply some kind of a channel. I'm not sure if it works, but it works pretty well. Look at this. We have the corrective channel here, so the main movement is to the downside. It looks very impulsive. It looks like we are heading lower from, well, pretty much very nice high, even if you consider the situation with the months. So that's the October, September, August, and this is July. Those are the lows of the June, July. This is the movement to the upside. That's pretty substantial decline. So what is going on right now, according to my analysis, is that this is the directional movement to the downside. This is a correction which is already in showing us the corrective channel. Okay, so we are now waiting for this market to complete this corrective channel. Very nice. And then the downtrend should be resumed. The technical resistance level, the first one is 88.38. The other one is, oh, we are above this level, 88.19, and one more please, this level is 87.76. So it looks like pretty nice technical resistance zone. We call it the supply zone. But the market managed to break above it, but just barely. So don't say anything just yet that the bears are done, because we might move lower anytime soon. Now, what do we have here? Moreover, is the key technical resistance 93.73 and the last high at 95.02. So plenty of the resistance still ahead of the bulls. Momentum is very nice, positive, quite strong, 62 points right now. Still some sort of the room to the upside, but we will see how the market will handle this channel trading. Key technical supports 81.51 and 82.31, and this low here. Apparently this one will be much more effective, 85.90. So the outlook for the crude oil in the short term might be slightly bullish, but then this corrective movement to the upside should be completed and the market should reverse lower. So okay, that was the crude oil. Let's find out what the S&P 500 is doing. Let's find out what is the US market doing ahead of the very important data release from the of course the American economy. So we got this three wave downside movement. Let me just reiterate this again. Where is my ABC to the downside? There you go. So from the highs you got A, you got B, you got C. So that's a typical correction, simple correction to the downside. This correction had been completed around the level of 4,200, and since then we have a bounce. We have a bounce that already, let's say, retraced the last, let's say this one is 61%. Clearly the market is taking into the account this sort of the movement, because 61% is here and we retrace 61% of the last wave down. Of course we can for example move it here, right, but then it's not that clear. This one is clear as very it's just the market reacts on this 61% level. So what do we have here? We tested it once, we tested this for the second time. It's around the 4,400. We went down. Now the moving averages are getting closer and closer. So if there is no breakout above this level, then we should expect some sort of the movement to the downside. Okay, so after this let's say retracement here to the upside, we should resume the down move pretty quickly, because of course the where's my let me just take a look. Where is the arrow? There you go. Because the market participants, well, in our situation, those participants are bulls, sorry, they are not ready to move higher. Let me just apply this this arrow here. There you go. This is the outlook for the S&P 500. So typical retracement, 61%, no problem with this, and the market is ready to continue lower. Of course, the lows of the VC around 4,200 are still taken into the account as the potential target for the bears. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.